How can you invest with Grant Cardone?
So Cardone Capital, every month I send out checks. It's my favorite time of the month. All these are ready to go. I just got to go in and sign them.
It's easy, safe, it might make you a decent amount of money, and you don't even have to be an accredited investor, which is the best part. Let me show you how. Hi, this is Fabi from The Next Big Rush, where we talk about growing your wealth through smart investing. If that's you, then hit the subscribe button and the little bell right beside it so you don't miss my best videos, which are yet to come. If you watch until the very end of this video, you're going to understand what the fund is, how I think it's going to perform, and how to apply if you would like to do so. Disclaimer, I am not being paid by anybody to say any of this. I'm just doing my own homework, trying to see if this is a good investment for my own portfolio, and if I like something, I tell you. Deal? Now here's why I think that through this new fund in Cardone Capital, you might actually end up making about 9% compounded year per year, which would turn 10K into $200,000 by retirement if you're in your early 30s like me. Now, what Cardone Capital is doing is it's opening up its doors to non-accredited investors, anybody that has at least $10,000 to invest in these real estate deals, and they're aiming for 15% IRR. IRR is basically the internal rate of return. Now this is different to the 9% compounded, which is what I care about, and we're gonna get to that in a moment. And there is absolutely no guarantee, for obvious legal reasons, that you're going to make any money with this fund, or that you're gonna make 10%, 20%, 9%, 15%, etc. But what we can do is look at past returns, see how they've performed, and maybe have a guess at what's to come. So basically, this is just run-of-the-mill real estate syndication, but for smaller investors. The idea here is that you put this money into the fund, and then Grant Cardone himself goes out and buys a piece of property using your money for the down payment. Now, he takes a 1% fee for managing the property on top of the management company charge, 1% for buying the property, and 1% for selling the property. This is the current deal that accredited investors are getting. My guess is that non-accredited investors are gonna get that or maybe something more expensive. Now, the great benefit is that this is a 10-year fund, and so you get monthly cash flow from these multifamily investment properties, and you also get profit sharing when they sell the property, which may or may not be at the end of the 10-year term. So basically, once you invest it, every month you're going to get a check from Uncle G, as long as that property that was bought with your money cash flows. If you've been following me for any amount of time, you know I'm all about the compounding effect of investment, and this is what I think these investments might do. So for now, there's no prospectus as far as I know. I haven't received anything, and I've contacted their investment team. Because it's not out, I'm just gonna go out on a limb here and show you what is currently being offered to the accredited investors, and you can compare notes and see what the deal is really gonna be like. So I did a little bit of research, and I found that there is a 6% preferred rate which gets paid out to investors. That basically means that the first 6% of cash flow is actually given to people like you and me investing in this fund. Now, anything above 6% is split. Cardone Capital gets 35%, investors get 65%. Now, I gotta tell you, when I saw that, I thought, dang, I wanna be a real estate syndicator when I grow up, because that's a heck of a lot of money. So your upside is always a little bit capped because you're not getting the full 100% of anything above 6%. Now that's quite normal, but these numbers are a little bit expensive. I found a couple of companies that will offer less of a distribution to themselves and more for the investors. But back to the money math here, I wanted to know what I think that these investments are going to perform with my measurement in mind, which is compounding interest. For me to get to $18.5 million net worth by the time I retire, and by the way, I'm well on track, I need to get year on year, compounded 13% per year. What I have here is a possible 9%, but with something much safer than what I usually do in the stock market. So I might be willing to put some of my money towards it and see how it performs. So I actually found a person on a forum that claims to have invested in one of Grant's properties in the past. And this guy is saying that he is receiving checks that amount to 11% of his investment every year. There was also another video of Grant's saying that some people were getting 12% cash flows and other people even getting closer to 20% cash flows. So let's try to be very conservative here and just say that 10% cash flow might be something achievable throughout the whole term. So if you have 10K invested and throughout 10 years, you might get another 1K per year. Well, that means that you have 10K from your initial investment and a return of 10K. So that's 100% in about 10 years. So I went over to cardoneacquisitions.com and noticed that they list their current holdings and their past holdings, which helps us to find out how much more or less they bought and sold their properties for. And after taking 20 or so samples, I saw that they sold their multifamily properties for roughly 69% profit. Now, I'm going to be conservative again and assume that some of those babies were bought in the depths of the financial crisis and that those deals aren't around anymore. However, when you put down 25% of the total cost of the property and your tenants are paying down the mortgage every single month, when you sell the property at 69% profit, you make more like 4 times 69%. Now, I know that Grant can get interest-only mortgages for a very sweet rate. So whether the final payday will consist of that increase in equity through paying down the mortgage or just the appreciation of the asset itself, I'm not sure. But wait, there are downsides to this type of investing, and there are clear risks. One is that the deal terms, like I just said, are not the best in the market. You can get better distribution so that you keep more of your own money. Also, if you're unlucky and the property that is bought with your money is in a bad location that falls out of favor with tenants, your cash flow may never actually reach what's projected for that property. And as always, there could be something bad, like a natural disaster of some sort that happens around your property or with your property, but my assumption would be that insurance would take care of all of that. It could also be that the market turns around and your property can't be sold for a profit. However, and this is the big kicker, I don't think I know anybody who can get a better deal than Grant Cardone himself when it comes to multifamily real estate. You can click on his site and check out the deals that cardoneacquisitions.com has, and some of the cash on cash returns that he's been able to attain are off the charts. Now, today they changed the website here on Cardone Capital, but I just checked this out yesterday and they used to list some properties at 40% cash on cash return, 20% cash on cash return. My guess is they took it down because people were probably looking at that, and there's a legal danger of people saying that that is the average return that they can expect. So you can't even see this anymore on their website. Okay, so if there are distributions that are better than Cardone Capital's, then how much better do they have to be than all these other alternatives? Well, my guess is about 25 to 50% better returns. Now, can Grant Cardone do it? Can he deliver the goods and actually get us a better return even if the distribution is less? Well, I don't know about you, but from what I know from Grant Cardone, I would not want to compete with him on any deal whatsoever for anything. I don't care if it's a 500 unit multifamily property or a slice of cake at the bakery shop. I'm out. If that guy's in, he is so ferocious that I think people just honestly sign papers to get rid of him. Now, because I was lucky enough to see some of those previous returns at ridiculous amounts, my personal view is that I think that this fund is super going to over deliver. And how did I get the 9% compounded, you may ask? I'm guessing that another 100% is going to be realized when the property is sold. The reason why I say that is because looking at their buying price and selling price, a lot of the properties that were held for close to 10 years appreciated enough to warrant that 100%. But the big question is the mortgage going to be paid down throughout the term, or are we gonna have to pay the full mortgage down by the time that we sell the property? That will greatly influence your returns. But you know what? At $10,000 a pop, I'm going to risk a little bit of money here. All you have to do is go to cardonecapital.com, contact them, and you'll be put on the list to invest in this non-accredited fund. That's it for me for today. If you like this video, hit like and subscribe because there's a lot more coming your way. Take care.